Hello, and welcome to today's episode of the podcast. Today's guest is Masa Hoshi, who some may know as the Skyhopper on Twitter. Masa is the co-founder of Bastion Trading, and today we're going to have a great conversation about the markets and what it means to run a trading firm. So, Masa, welcome to the show.
Oh, thank you for having me.
My great pleasure. Would love to just get a quick intro on your background and learn a bit about Bastion Trading as well.
All right. So my background is I guess you could tell from my accent. I spent a lot of time in the United States, and then I grew up there mostly, and then I went to university there. After that, I joined a bank, UBS, as a convertible bond trader to start in the very, very early 2000s. Also, you could tell how old I am at this point. And then I worked at a couple other hedge funds at JP Morgan as well before starting this trading firm that's now Bastion Trading in 2014 with a few partners. Originally, looking at Bastion Trading and what it's done in the past for a number of years, it started off trading China A-share equities, and then Bastion got into trading cryptocurrencies in around the summer of 2017. And it's been, nearly, I guess, six and a half years that this firm's been trading crypto. And so, that's a brief history of Bastion and also myself in terms of what we've done in the past.
Well, normally I would ask, as a follow-up to that, what was the initial appeal of trading crypto? But given that you were already trading Chinese equities and say not US stocks or US instruments, I imagine it was some of the craziness and volatility of the asset class.
We were first really attracted to trading. There were significant arbitrage opportunities that were unbelievable that were available in crypto in 2017. So, for example, like BitMEX futures are trading, with only 3 or 4 weeks to go, 9 or 10% premium to the physical price of, say, like a Bitcoin at that time. So you could tell that within a very short amount of time, especially from an annualized basis, the kind of, you could say, the risk-free profits were to be significant. We couldn't actually believe our eyes that this is true. Like, we thought we were going to get rugged if we ever traded in these venues. Frankly, I thought BitMEX standard for Bitcoin Mexico. So, I thought, therefore, definitely we were very incredulous in the beginning as to what it was, but we'd found that the opportunities, whether it was even arbitraging, say, Japanese yen exchanges versus dollars, where it was just simply too good to pass up. We tried it out. It somehow worked out. We got our money back because we tried to do the entire cycle of putting money into the crypto ecosystem, trade it, and then pull it back out as fiat. Because we always figure with returns this good, there must be a catch. But it worked out. We continued doing it, and then it's just that I think still it's a growing industry. So Bastion is continuing to be materially involved with their assets in crypto, even to this day.
Yeah, so definitely that global exchange to kind of Japanese or Korean exchange arbitrage seems to be something that brings a lot of people into the market. Those kind of lower hanging fruit arbitrage strategies, do they exist at all in the market today still? Or, as the advent of larger firms and firms like yourself closed most of those arbitrages today?
They're still available. I think there's still a little bit of disconnect between traditional finance and consider crypto finance, for lack of a better word. Are the same kind of opportunities available? No way, right? Like for especially physical coins, the arbitrage is definitely not there. If it is, it's probably an indicator that something is actually wrong with a particular counterparty, like the exchange. So a lot of these things have all the, I guess you could say, the most easiest money has disappeared. But this is the same in what we call a lifespan of other markets. in the world over time, right? So I think a lot of the trading is kind of moving beyond. I mean, it has already for years moved beyond there, and I think trading firms, or hopefully, especially like Bastion, maybe getting a little bit more diversified and sophisticated in its trading, branching out to other things that it hasn't, it didn't have to before, such as a bit of option trading, a bit of, I guess, a little bit more what you call more active or more expanding into, say, market making, both for maybe outside counterparties and also for its own proprietary purposes. Strategies such as long short pairs, those things have been more instituted into the trading strategies recently. And then also, I guess, still in terms of, say, like the cash and carry arbitrage that was so prevalent, say, in 2021 with these kind of delta neutral firms. Like Bastion, still there are pockets to take advantage of, and those are still being traded to this day.
I'd love to come back to some of those pieces, specifically options, in a bit. But one thing, I guess, maybe specifically is just how you guys are thinking about DeFi today, right? Are you looking at arbitrage opportunities, for example, between centralized exchange and decentralized exchange asset prices, or maybe other things within that world of opportunities?
Yeah, it's some things that we've looked into. It's I think Bastion's done some part-time trading in this. As far as I think Bastion's success in terms of trading these areas, it's a lot of it, say, in 20, I think some of the highlights in 2022 include things such as DAO, more like DAO activism has been quite good, and then finding these kind of what's considered risk-free value type of positioning. So some really successful positions in the past that's involved a bit of activism in 2022 and 2023 include things such as the Wonderland DAO, where I guess you could say almost like a treasury-backed token was trading at a significant discount in mid 2022, which due to some of our activist efforts had moved the price had moved considerably back to, say, it's a fair discount to the net asset value, but gone up way beyond the bond DAO prices that it was previously. This year, some of the winning stuff included, for instance, entering into the Nexus Mutual token, which is, again, it's a kind of insurance capital, which was, I think, unfairly punished with the sell-off in 2022, and the Bastion was able to enter at some decent levels. And now, because the Nexus is trying to revamp itself and create improved and price stabilizing, you could say, dynamics such as buybacks, the price action has been quite favorable. So these are kind of you could say, like, these DeFi-ish type trades that Bastion has looked into, because the returns have been very, very good. I think the kind of work and understanding for these kind of trades does require a bit of work, which Bastion is willing to do, and so it's those are the trades that I think has made the most. We don't Bastion doesn't do things like MEV trading or those things like that. So
yeah, so those are two good examples, because as I recall, you guys really kind of spearheaded on the Wonderland side. So you guys took an extremely active role there. In Nexus, I don't know how close you were. Maybe that was more just, you saw the work that was going on and just kind of entered the trade. But, I guess from a kind of idea selection process, or how do you even go about discovering something like the Wonderland opportunity? Do you have a team that's going out and researching these? Is it just people coming to you? How do you source some of these opportunities?
I think in terms of the Wonderland, it was quite fascinating at I guess you could say, the end of 2021, that there was these Olympus DAO things where we originally looked at and tried to maybe degen it into in the first place, or at least I think some of our, like, as personally, I think everyone kind of dabbled in it a bit, but we'd always figured that possibly that there is a chance that these treasury-backed tokens may go into discount to its treasury, because its whole purpose was to hold a treasury. So it's almost like a capital raising exercise. I guess it could be used for future utility later. I don't know, right? But at least that's what it seemed in the beginning. So that just ended up being on our radar for a long time. Right? So then we looked, and then when it actually did happen in early 2022, it was something that was quite interesting to enter into and see what could be done there. And then at the time we didn't know, but it did seem that the discount was also ironic. I don't know if it's ironic or not. What was actually accentuated by the fact that Alameda Trading themselves was trying to exit their position at really horrific levels, where it would values like significantly to the discount, both to their entry level and to the net. You can consider the treasury value of the
And what time
protocol.
period would that have been?
That would have been probably March, April, I think.
Okay.
Um, so that was one. The Nexus, we've been a user of Nexus for ensuring, especially if it went at that a while when we were DeFi farming, for example. So the from time to time, Bastion was buying insurance. So it was a user. And then we did look at the tokenomics and such. We thought that it did favor the, in a way, the pricing favored the user, but the terms favored the protocol. And so I guess there's a balance. But later on, again, something because it's something that Bastion is a user of. Again, the tokens kind of ended up on our radar, went to massive discount, and then it just looked too cheap that any kind of positive DAO like improvements, you could say, would really significantly impact the price, right? So that's kind of what we've been looking at. But again, there are a lot of things on DeFi Llama, for example, that may actually even give you a list of protocols with large treasuries. When you find one, you may find similar protocols that are, I guess, again, they're similar. They may have similar type of economics or governance that one can go in and try to look at, right? Other ones that I think Bastion dabbled in is like the Rook protocol. It actually did a rage quit where the treasury assets were split and returned between to the team that I guess for years to their defense, they've worked quite hard in managing and retaining that treasury and also making some revenues. And then also for the token holders as well, right? That one, Bastion was involved on the market making side within their protocol. So again, something coincidentally that Bastion was following due to like business involvement, so to speak, right? So I guess we've been lucky that these kind of opportunities have come by just simply by us being in the right place at the right time.
Absolutely. And I think there is something to be said there about just being such an active market participant across so many fronts. You're bound to just have these things that sort of appear at your doorstep. And, in some cases like Nexus do actually kind of look like free-ish money. Maybe it takes a bit of work to get the team to be convinced to do it, but value's there. It just needs to be properly priced. So on that, you guys are obviously doing a bunch of things: farming, options, derivatives, market making, some activism. How do you think about structuring the team at Bastion? Does everyone play kind of a generalist role? Do people have sector specialties, product specialties? I'm always curious about the composition and team building aspect of trading firms.
I've handed over a lot of the day-to-day management actually to the current, I guess you could call it, the executive team. So I don't really look specifically or micromanage the day-to-day. But I can tell but I do remain as a supporter, advisor, and investor. And I do have a bit of insight into that. And when I look at it, I think there's a bit of effort to kind of manage things, if possible, as kind of a one team, one dream type of thing. As far as, I guess, quant and trading and research, those areas, there are personnel working in multiple geographies. They have to work together even though they're physically separated. As far as functions, I think with many firms, if you look at the trading side, the research side, you do end up naturally getting certain specialization by everyone individually. Something I think can't be really stopped, and it's a natural progression of things. So I think as a company grows, you may find usually a company may have a few like relatively, I guess, senior guys, or how to put it, like senior junior guys, a smaller team, and when they're growing in that very small stage, it's everyone has to do a bit of everything. At least that's kind of the concept. Then as a group or a company or a partnership, whatever you want to call it, grows larger, you will start to find inevitably kind of compartmentalization and specialization in certain areas. And as hard as I guess firms try to de-silo themselves, some of it does happen. It's just a matter of, I think our management does a decent job of trying to keep things from being too like siloed and dislocated from each other.
Yeah, that's an interesting point. And I guess maybe we even should have clarified just kind of your day-to-day role at the firm at the beginning. But as you alluded to, you kind of stepped back from the day-to-day of management of the firm and still remain on the board, I think, as the chairman, or but in a slightly less active role day-to-day. But don't think that takes away from any of the conversation. So
yeah, I get to say more things that I want, I guess.
exactly. And so I guess one question, because this is not the first trading firm you've worked with, but more generally, I guess when I think about trading firms, which obviously from the work we did at TrueFi, we interacted with a lot. I always find them very fascinating, just in terms of how they develop their place in the market or develop an edge. And I tend to think of that in terms of building systems, either on the technology or the risk side, and then also just talent over time. Do you agree with that assessment that sort of systems and talent are the most important things for developing edge in a trading firm? Or, in your mind, I guess, what makes a great trading firm?
So there's many different kind of trading firms, and I guess it really depends on the preference of the management, whether they're the partners, the original founders, and yeah, I do find it interesting how different firms kind of move into different or they find themselves in different directions, and sometimes very, very quickly, and none of it being a bad thing, right? So you'll find some firms where they're very, you could say, I would consider them very tech savvy, very tech heavy, very quantitative, very quant, you could say, in terms of their trading. And they're trying to capture, generally those kind of firms are trying to capture these relatively micro moves in the market. I think those firms tend to be a little bit more nimble, slightly smaller in terms of personnel, because it's because of the tech that they develop. They can, I guess the scalability is a lot better. So you find a lot of those kind of firms, which I think is great, right? Other firms, I guess, tend to become a little bit more I guess you could say they're doing a bit of everything, and those, yeah, by naturally have to work on basically what I'll consider balance sheet. It's kind of like a balance sheet acquisition type of game. So whether it's getting clients to lend, or those like those firms are trying to make perhaps more money on a varied number of things, while trying to keep their funding and operational costs a little bit lower, despite having a bigger size, right? So there are firms like that, and it really comes down to, I think, some of the experience and the personality of the founders, right? So there you could start telling a difference of the different styles, and a lot of it happens to be, when you look at their CV or their background, it kind of starts falling into place why those firms may have ended up where they are, right? So you take like some of the more quant firms. A lot of guys may not have worked on the front office of investment banks, but they're very good at IT, who coincidentally also have they've been blessed with having a knack of the markets a bit and understanding some of the market dynamics and things like arbitrage, right? And they have a certain fearlessness of doing it. So there's a lot of firms that come up that way, I think. Those who may have spent like much longer term, or the majority or a good chunk of their staff or founders come from investment banks, you will find their operations probably, if they've given a chance, they've grown to have a much more diversified set of business that may replicate more of a kind of a mini version of their ex, employers, right? So you'll see a set of those, and then there's a few random ones in between those two possibly, and then there's a few that's even like what you can even consider to be somewhat outliers, who have a slightly different angle. So yeah, but it's good because there's a bit of kind of like everything, right? Ex option traders, a lot of them end up having big presence in the options market, right? Like, and they tend to really try to concentrate their power in those areas, like being like high volume participants into like a derivate, and then there's a whole slew of others, right? So yeah, it's quite interesting. I think it's healthy for the market that there are a diversified set of players. I think now there really isn't such a huge dominant, like a massively dominant player like we would have had in 2021. So in a way, it's kind of, I think this market right now is quite interesting and quite good.
That's great to hear. Yeah, I mean, I guess, excuse me, on the note of dominant players, the two kind of biggest fish in the room, or even if you include someone like Genesis, maybe on the derivative side, three of the biggest fish are gone. Alameda, Three Arrows, again, even a giant desk like Genesis. But also, I imagine a lot of even the smaller firms were potentially impaired over the last year just with FTX and all. Maybe to jump around a bit, but what have you seen sort of in the markets change since what I call kind of the before and after period of November 8th of last year?
One thing that was always curious, and I think whether other firms admit it or not, is FTX at that time had a very real but very quirky price actions in their in the trading. And I've heard even things like other trading firms I talked to who thought more in terms of the latency and those things, even call it to an extent of it being somewhat systematically glitchy almost. So I think a lot of and FTX because of at the time the kind of retail crowd that it or both retail and institutional crowd, I guess you could say, it attracted, really created a unique supply demand, I think, factor there. So it was truly another point for price discovery as well for prices, right? So there, I think a lot of trading shops were using that, and maybe they were using that as an offset with, say, like Binance, for example, where the fact that you have like real competing exchanges created a lot of opportunities. And so when FTX, unfortunately, all the things that happened last year, I think a lot of firms had to kind of reset the way they would think about how to trade the markets, because this kind of, I don't know how do you put it? It's like, in order to make bread, you need wheat and sorry, not wheat, like flour and water, right? It's like one of them is taken away, so you can't make bread anymore, right? So I think that took a long time for firms to really, I think, internally adjust to that. And then at the same time, you find it that price discovery for tokens was probably going to be concentrated almost singularly on Binance, again, which will kind of reduce the opportunities for the time being for a lot of firms, right? But now I think finally we're starting to see like other firms kind of take up now a more market, I don't want to say dominant, right, but a solid marketplace like OKX has come back in style, right? And other exchanges seem to be kind of moving up as well. So I think from there you're starting to see this diversification a bit again, and so I think again that's going to be quite quite good. And I think this is why, like, I think you'll find a lot of trading firms become active again, right? It's just maybe unfortunate for some of these smaller guys, and other ones they may still have this, they may still be kind of licking their wounds, or rather their funds may be still stuck in their FTX claims, for example, right? To a good extent, that they're kind of hampered, that even though they want to deploy capital, maybe they can't deploy the whole thing, right? Obviously.
Yeah, on a related note there. So, you kind of outlined how the centralized exchange and price discovery landscape has changed and is changing. But either from Bastion or just from what you've seen in the industry, how have practices within trading firms changed as well, right? Is there more of a hesitation, for example, to deploy onto new exchange? Is there more of a push for brokerage type solutions that sit in between the exchanges, or just kind of risk management overall? What have you seen adjust following FTX?
Even with Bastion, and I'm quite sure with other firms as well. It's, I guess, what is it called? Once bitten, twice shy, right? I think a lot of firms have been looking at how to diversify and minimize the concentration risk in any given exchange. I think there's a lot more scrutiny placed on even the capitalization, the longevity of management, and those things as well. And I think maybe even some of the exchanges, like, there's no more kind of like a trust. I trust this exchange bro, so we'll just put a lot of money in. I think there's a lot more work that's done. I think there is a bit more kind of sharing of some information within the trading firms to kind of examine from time to time the credit risk of the exchanges. So sometimes, like, over beers or stuff, this will become a topic from time to time, especially if there does seem to be some credit stress in the markets, right? So, I think as trading firms, if you want to call them, or if we, all of us collectively want to call each other's competitors, I think we want to compete on trading, not on credit risk, right? So, I think those kind of issues are much more at the forefront. And maybe you could say in the middle of the mind as opposed to the back of the mind it was, say, a couple of years ago. So yeah, from that aspect, I think a lot of things have changed. And exchanges, I think, do also at the same time recognize that they have to do a lot more to assure the users that they are safe, or to provide solutions such as a copper, for example, or hidden road, or those kind of access to make it to ensure that there's participation in their exchanges.
Yeah, on that, you mentioned, maybe just a bit more diligence from the trading firms on the capitalization of the exchanges, the longevity of management. But what insight or kind of diligence are you even able to ask of these exchanges? Is it just things like proof of reserve that are kind of public, or are you actually able to do a deeper level of diligence before trading?
I mean, that's one, right? And then there's just some things like, I guess, CZ kind of says it, right? Like, you do want to, like, for Bastion to a certain extent, not all the time, right? And never is it so accurate, but there's little things that well, look, there's things that anyone can do to take a look at their service providers, right? So, for example, I think one of the basic things to do is, if it's something where you do need to commit a lot of resources, right? One thing to do, for example, is even to go look at Glassdoor, for example, right? Take a look at, like, like former employees, how they rate the place, right? This could be the same for anything, right? Like, what anyone's trying to check out. And you don't want to see particularly bad reviews, and the worst thing is maybe something like delayed paychecks or something, right? So, like, I mean, that would be like a severe red flag, for example, right? Other things is like, you take, for example, like a Binance that's been around for a long time. It does seem that there is possibly some kind of risk aversion into doing too much in internal trading. I mean, it does seem on public records they have done some a little bit more than I would have even thought. I'm a bit surprised, but again, it does seem that they do they have such a big business, and I don't, and the management never seemed to me that they're in terms of rocking the boat in that area of taking excess risk from, say, an asset perspective. I don't think they've done. Clearly the U.S. DOJ settlement clearly took risks in other areas, but again, since that's all settled, it's okay. Again, other exchanges that are trusted is take, for instance, like a Bitfinex, because they've had a long history, right, of being hacked in, I think, 2016. They had the issues with related to losing funds with crypto capital in 2018, 2019. They've been able to get through this all, and clearly through the economics of Tether, this group, you could call it, is very, I mean, it's extremely well capitalized, even from the equity alone that will be provided by Tether, right? And that's just simply the interest profits, right? It's in the billions of dollars. So that's an exchange, I think, that is underrated, but it's like group is heavily capitalized. For example, OKX, again, this exchange has come back from near disaster, right? Because in 2020, the CEO was detained in China related to some FX trading issues, and I don't know if you recall, but then no one was able to take out assets for nearly like 40 days, right? No one knew what happened. And it was, again, a very powerful, very big exchange that found themselves in a near disaster scenario, which, again, luckily you're able to come back from. I think for OKX, a very humbling experience. They survive, and then they make increasing moves. Might be slower than we'd all like, but they are obviously progressing to from that time to ensure that its assets are relatively safe. And I think they kind of, when things like that happen, I think the management also appreciate the business that they do have, right? So again, these are like three examples of places that we've looked at and traded with for a very long time, and definitely seen them through up and downs that they've been able to just get through, right? Newer exchanges that come up, these post 2018, 2019, right? Again, you want to commit as much capital as these old school guys? Probably not, right? Only for the fact that you haven't seen them actually take a lick and then come back, right? And so I think that's kind of the way Bastion will approach it. I don't know about other firms, but there's a mix of things that you can do.
Yeah, so there's two follow-ups I want to go with from there. Maybe we'll go with DeFi first, though. So, I think that a narrative that I certainly see propagated, and I'm curious what your thoughts on it, is that given the events of last year with FTX, even now some of the controversy around Binance, even though they seem to be good, but we are recording this a week after CZ appeared in the US. Do you find yourself at a point where exchanges like DYDX or GMX are at any kind of feature, price, latency parity to what you would need to make some of these DeFi venues your home of trading rather than Binance, OKX, and others?
So I think with these kind of derivative exchanges, I think they're quite what do you call it? Like very innovative. It does allow for kind of you could say that they're trustless, right? Because you're not dealing with some CEO doing something screwed up with your money, right? As far as what's been deposited. So I think from there it's quite innovative. The thing is, again, it might come down to a bit of the implied capitalization of the company. How much is the equity worth? Things like that. So it's not yet, I think, developed to the extent that everyone would like. So again, something like DYDX and GMX, Bastion does use. So it's not something where it's avoided. I mean, very far from that, right? But as far as having a dominant position, I think it's going to take a while, just because still everyone is so used to trading on, well, at this point, like Binance, right? So And you see this also in TradFi, right? That dominant market players tend to consolidate, and everything kind of consolidates in one way over time.
Maybe I'll take one just to close out that last thought about centralized exchanges. You mentioned some of these newer entrants that come into the market after 2018. And something I've always been curious about, and actually, even kind of going back in time and share one of my own stories here, back in 2018, 2019, when I was working on TUSD, you know, I spent a lot of time in Asia meeting with these smaller exchanges to try and get them to support TUSD alongside at the time what was only Tether. And I think at the time I didn't realize, certainly I was very early into my career, I didn't realize how sketchy some of these exchanges were in hindsight. And I now, I mean, maybe I can understand this to some extent, but now I look back and even today, I'm confused who the user is of some of these very small, often kind of Chinese associated type of exchanges when things like Binance, things like OKX, things like even Bybit are so accessible to these people. Like, why are there still users on these very small exchanges?
I don't know. I mean, there are clearly users on these exchanges because, and I'm not necessarily sure. I think, like, when you look at, say, some of the, maybe not the top, but the next level, I can see that they have marketing, and they do get guys to come, or traders or retail, to come in and trade. That's definitely a case. In other cases, I think, we could kind of, I can look at areas like um, some of them may have special niches due to, like, projects being able to list on those exchanges. So you may find those communities having to open an account there, and since it's there, they may trade everything else, because there. I mean, differing exchanges have different, like, listing hurdles, right? I mean, based on money and everything else, right? So maybe that's the case. I could probably understand that with quite a few, of the exchanges. Once you get beyond there, I really, I don't know.
Yeah, that's a fair point. And I actually think even some of Binance's early initial user growth was that they were one of the first places to support like Neo, the kind of Chinese Ethereum competitor of the time. And they had support for some special airdrop, and that was some of their initial community growth as well. So maybe other exchanges see those opportunities with obscure coins too.
Yeah, I mean, back in the day, Binance was very fast at integrating new blockchains to settle tokens to settle there, right? So I think that really helped them out to really grow, right? So because some exchanges may choose, like, some random, like, chains that they would support, like even like a Ripple, right? Or at the time, I think, like an IOTA or a Cardano may not be listed everywhere, right? But I mean, Binance did their best to try to list absolutely everything they possibly could, right? Um, as far as supporting blockchains, right? Like these, lack of a better word, these L1s, right? So I think they did a fabulous job on that in the beginning.
Other point you'd kind of mentioned here is with some of these fledgling exchanges, maybe they can merge, whatever. You actually also tweeted something similar the other day about dexes. And, you had said on your tweet something to the extent of, in the real world, we would see some of these lesser, smaller dexes, on DeFi Llama actually starting to merge. Now, today at least, we've seen almost no successful M&A within on-chain protocols. Um, I have my own beliefs about this, I guess, but what's your perspective on that? And, in an ideal world, what does consolidation of DeFi protocols look like?
I guess, like, it's okay. One thing is, I mean, it is, so the answer to that is quite a few fold, right? But one is that I guess you could say, from a pragmatic basis, to the extent that some of the code, the team of these dexes still have access to these smart contracts to a certain bit to edit them, or whatnot. Or to come up with new products, for example, or to basically fork to fork and support the DEX on, say, a new UI, for example. You would ideally want to have, say, like, you have I don't know, DEX A and DEX B, right? They would actually have a a swap contract where tokens of Dex, the governance tokens of Dex A and the governance token of Dex B can be swapped into new governance tokens to say Dex C, right? The new Dex, right, being Dex C, and then the two teams will try to kind of combine the features as much as they can, and then use a combination and fork, right? To the extent maybe fork the two or come up with a better, or hopefully a merged or better version, more features, more, I guess, more breadth in terms of product availability, if there is any, into the new protocol, while decreasing some of the costs, right? Especially if they're finding that the combined funding is getting low, right? So that they can kind of combine the TVL, the volumes, to again be competitive as one larger um, entity than anything else, right? But there's a lot of things that could prevent this, right? One is, nonetheless, these protocols will have a DAO treasury. The cynical side of me is that the teams may are still trying to like slow, like, run down the cost by paying themselves. If they merge, like, the purpose is to reduce costs. Someone's going to get shafted from that, right? Even though it's possibly best for the communities that this happens. But again, that's quite difficult to do. I think the overall the type of I guess token holders in these, they're they may not be as active in trying to find a solution like this. So there's a lot of there is a lot of hurdles to it, and I think, yes, in the real world there's going to be, or in the TradFi, or there's going to be a lot, because the way companies are structured, especially public ones, these things are a bit more significantly easier to achieve than in DeFi.
Yeah, absolutely. And I know you've pushed for some activism in general. Have you pushed for any activism on M&A, or kind of have you approached teams or had teams approach you on this?
So I've been approached once in a while to take over a project that's been, like, especially with funding that's dead, right? Which is difficult to kind of revive, right? In a way. So those are a pretty tough slog to do, unless there's already some team and protocol willing to take a like a similar sector type of thing, willing to take a look at it and see what they can do with it. But for us, we're looking at it kind of as a, half operator, half like investor, right? Or like a holder. So it's very tough to be able to do that from the operational side, and they're not totally equipped to handle all of it, right? So I guess, I mean, if there was something that looked very similar with a sector, or something that are close, other DAOs or other protocols or other foundations that Bastion's close to, maybe it's something that could work together. But those things haven't really come up, so not a lot to converse about.
Got it. Okay. Well, going back to one of the themes that we talked a bit about, a somewhat consistent theme I see across your Twitter, which is a great account, everyone should definitely follow, is you're very direct, I'd say, with calling out bad actors in the space, whether funds or protocols or exchanges or whatever it might be. And I think especially those that have lost clients' money. What inspires you, or kind of got you started maybe with speaking out more than some of your contemporary trading firms? I think it's a bit uncommon to see people so directly call out firms. But where does that ethos come from within you?
Ultimately, I don't know. Like, as a trading firm in crypto, and especially as a like with a TrueFi, which works very closely with Wallfacer and all the places where Bastion did, previously, right, borrow from, and a lot of them are in diversified portfolio, and a lot of the models are basically, there are pools that lend not only to Bastion but to all the other borrowers, right? And so the way I think about it is, those borrowers, right, whether we were, whether we've repaid, I mean, we repaid everything obviously, but and we're no longer a borrower, and even in such a pool, those people or users who lent into the pool are still our customers, right? And we And it just pisses me off that like firms would abuse those customers' trust. And who's going to be out there looking out for them? A lot of them are they're not going to know fully how a trading firm works. Again, I don't know how every particular trading firm works, but again, I don't mind calling bullshit when I see it because it's a level that you could see that it's not it doesn't smell right. And when those customers or those counterparties get screwed over, the chances are is they may not come back, right? Because their trust has been breached, right? It's not Bastion's fault; it's someone else's fault, right? But yet at the end of it, it's when you look at it down the long term, it's Bastion that also gets screwed. So I say to those actors, right, go fuck them, right? Like, I mean, I'm going to call them out because those guys have ruined our business.
Yeah, makes total sense. And I think maybe a common theme across some of those actors, and this is also a theme that I've either spoken to you about or I've seen you tweet about, I forget, but just really the importance of risk management in building a trading firm. And I think, as individuals, this is probably not something that individual traders think as rigorously about. But I do get the impression that that's been a real focus for you and for Bastion. Can you speak more about the importance of risk management in building a firm? And in practice, maybe what are things you do that kind of put you, above the herd or kind of at the, top percentile there?
Okay, so even in terms of an individual trader, right? Risk management is huge in the way you would have to approach investing, or more so, you could say like short-term trading, right? Just because we're not blessed with having both infinite time and infinite money. So when you and it's not that they're so easily replaceable. I mean, time is not replaceable, right? But money is not easily replaceable. Like I don't have a series of rich uncles I can just beg for money all the time, right? So because when you lose the money, you have to earn it back, right? You don't run it back turbo when it goes to zero. You got to go to McDonald's and work for that salary and then reinvest, right? It takes a long time, right? So risk management as an overall philosophy is very important, right? Now, in the beginning, if you have your first paycheck and second paycheck and you've set some money aside and that size isn't that big relative to your cash flow, yeah, sure. Like maybe the first couple of times you could swing it, but then after that, it gets increasingly harder as well, right? Just because there's potentially more to lose, and there's just simply less time to make it back, whether it's through a salary or again trying to run it back turbo, right? Like you only get so many chances in your lifetime, so each one is very precious. So as to specifically to Bastion's risk management, I guess in terms of position sizing, and to look at all different kinds of risk, counterparty risk, market risk. Those things are all considered and watched over. Knock on wood, like by all the senior management and watched like a hawk. Right? Not everything is perfect. There are things that come out of left field, but it's always, I think, good to be generally conservative if possible, right? No one is going to regret a missed opportunity because one's too conservative, right? Or seriously regret it, right? Versus overlooked or aggressive, lack of risk management that leads to larger losses, right? That is usually a lot more painful. So I think that's the general philosophy that's taken. As to the specifics, yeah, like it's just establishing limits based on that. Everyone has different flavors and the tolerance. I do think Bastion's tolerance tends to be a bit lower than many others.
Yeah, over the long term, perhaps that is the correct decision, as some of the high flyers have shown. But time will tell, I suppose.
Yeah.
On that, are there, so it seems like kind of embedding risk management throughout the firm is very important. I also wonder, just amongst your team, are there traits of successful traders within crypto you've seen that are unique from traits of successful traders in traditional asset classes? So, something that comes to mind, for example, is I imagine if you trade at a bank or a large hedge fund, someone else is kind of taking care of the risk management function. Whereas at a crypto firm, It might rely more on each individual person, but I'll let you answer. Unique traits of successful crypto traders.
Okay, I guess from comparing to TradFi, right, is getting over the mental block that really fundamentally most of these coins or tokens really have no intrinsic value. I mean, does Bitcoin, like, I don't know, like Bitcoin's, I mean, you don't answer your phone with a Bitcoin, right? You answer with your iPhone, right? So thus, I mean, Apple has real, like, that kind of, you could say from an equity perspective, of fundamental value, right? Um, but does that mean that Bitcoin doesn't have value? No, absolutely not, right? I mean, market says it has what, currently $38,000 per Bitcoin of value, right? That's no lie, right? Um, and tomorrow it's going to have a price, and it ain't going to be zero, right? So I think that's the biggest, I think, hurdle to get over is knowing that these assets have an assigned, I mean, price, because the market puts it there, right? Which I think a lot of people who've looked at things like discounted cash flows and those things, right? None of it works in crypto, and that's also the beauty of crypto, is that because none of it works, be, a lot of times you don't have to think about those factors. You don't have to lean on those factors, right? Yeah, in that perspective, it's kind of believing, yeah, somewhat, yeah, everyone has to kind of believe in the story, right? One way or the other, even as you could say, you're market neutral, pessimistic as one is, right? You gotta have to believe in some kind of, in some sense of that, right? And I think that's really needed in crypto, right? Especially if you're kind of looking at like doing things like, positioning directionally as well, right? Like, it only really makes net, right? It does make sense to be long, right? To be direct position directionally, that things are going to go up. And that's what history has shown. And probably that's the case, right? Does that mean you should always buy? No, it doesn't mean that. But it's a lot scarier to be short than to be long. And I think a few of the guys who have crossed over probably have thought, yeah, like these tokens are going to go to zero, right? Because they do have fundamentally almost no value. But then I'm pretty sure quite a few of them have gotten punished for it. So I think that's the big difference.
Could not agree with that more. Where, I've worked in the past with people who, I don't know, feels like they kind of got dragged into working in crypto, but weren't actually believers. And I agree, it's so hard to get someone over that hump if, they're kind of not inclined to, and I guess it's different than, say, for example, if you were a trader at, JP Morgan trading some random bond, you don't really need to be a believer in, whatever kind of structure you're trading. You're just kind of trading an asset, looking at numbers, and, are there cash flows? Are they able to pay service the debt? Whatever it is. And I do think that's quite different in crypto. So, in the past, I guess when you've been hiring, how do you kind of screen for that, right? So are you screening for people that are already bought into the vision? And I guess, like, how quickly do you expect them to get up to speed on crypto DeFi knowledge? What does that learning curve usually look like?
Well, no, I generally think we do ask whether on their personal accounts they trade a bit of crypto before, or maybe, I mean, usually is, especially if it's making a real, like a full time hire, for example. I generally do ask, like, do you know how to use a MetaMask at least, right? Especially on the trading side, or business development side, like those are things I do kind of ask, right? I mean, that's probably at the minimum bar that someone should really get up to speed to. Yeah, those are kind of the things that we do look. So we do look for some intrinsic interest in the asset class. A lot of, I guess what might be good is a lot of the hires, I think, not only for Bastion, but for a lot of firms, occurred probably early 22, late 2021. And you saw a huge influx of people coming from traditional finance trying to find, a respective similar type of mirroring role, or maybe a slight change that time. So, finding the number of candidates was quite easy then, right? And then everyone was trading in crypto at that time because it was so hot. So pretty easy at that time to find candidates, right? And then I think also cyclically with what's happened since, the coincidentally or luckily, I think you're seeing a lot of movement within firms now. So within crypto firms, for example, so a lot of people moving around now between the firms. So again, those you do expect a bit of experience in crypto. So yeah, luckily it hasn't been such an issue for I think us and I think for many other firms to find those candidates.
Yeah, I mean, I feel like in the past few months or so from some of the big trading firms, we've seen people with fancy titles decide to go back to traditional finance, and that's just part of the normal cycle. And other people stick around and wind up doing better. And same people from TradFi will come back when Bitcoin hits 50K again, and then we'll leave when it hits 25K again, and cycle repeats.
Yeah, that's pretty much the way it is. So
Yeah. I mean, I kind of remember even personally, I in the early 2020, late 2019, where things were at or near their all-time lows. I even remember how dejected I felt at the time and considered going back to more traditional tech. And fortunately, I did not and stuck around, and that's paid off. But yeah, those lows are low. But coming back to maybe a more positive note, so outside of some of the liquid strategies you guys are doing, have you guys been active in more esoteric things like trying to trade NFTs? And then have you done anything in kind of private investing and VC as well? And what do you think about those sectors of the market?
yeah, we tried the NFT thing in late 2021. I think we got really burned on that. So, like, I mean, we really made some bad choices on those NFTs, right? Like, remember, I mean, we must be so wrecked on like the four mechas we bought or something. Like, I mean, absolutely
Oh God.
disastrous, absolutely disastrous decision making on our NFTs, right? Like, I think we should just stick to trading, like, liquid relatively commoditized products is probably, I mean, what we learned we should do. Yeah, I mean, otherwise, like maybe we like buy like a, not, just a NFT is for the sake of like being part of a community or something, which I find actually kind of interesting these days, as an asset class from that perspective. But nonetheless, like in terms of illiquids, we don't have too much. We've been very selective in a couple of the investments that we've made. I think before I made some investments into like we found some shares on the open market of Animoca, so kind of said, okay, maybe Yatsu can take care of all our decision making and what to degen pile into. So we'll just leave it up to him, right? So I think that was our conclusion to do a lot of the kind of the VC type of stuff. So something that we haven't really done too much into, definitely not our forte, basically. I think there's a lot of other guys who are really geared to specialize and find, I don't know, the right thing very early on that makes some project or company or something special. I don't think we have that competitive edge. So it's just something to stay away from.
Yeah, well, you mentioned Animoca there, and they certainly have a very ginormous venture book. Uh, I think I've seen you tweet about them a few times that they actually have some kind of listing on one of the Australian stock exchanges, and maybe there's some kind of disconnect between that listing and their where they keep raising money at privately. Curious what you saw there, if anything.
I think the way Animoca does like their cap. So the interesting thing to know about the way these days how Animoca raises capital, and again, nothing wrong with this, is that they are actually they're issuing convertible bonds. And this is public, right? They do say this on their investor website, right? But the convertible bonds are initially the conversion price is at their last, I guess you could say, last series raise. So yes, it does nominally look like they've raised at that price, but in reality, it is they are issuing securities that are senior to the equity, right? So it's not necessarily apples to oranges a comparison. I think they did some issuance in combination with some issuance in Mochaverse. Again, I think that puts a lot more implied valuation on Mochaverse than say like on the stock. And I'm pretty sure their investors are savvy enough, I assume, to know that as well. So yeah, that's kind of I don't necessarily want to say it's a disconnect, right? It's just kind of the way that they're managing their fundraising.
Well, I won't claim to be an expert on the topic, but something about raising a bunch of debt uh, that could convert at this last round price seems potentially kind of dangerous for equity holders, just in terms of getting crammed down on their ownership of the company. No.
Usually, these things may have a convertible price reset to what will be the valuation of the next round. So while it may initially look like the dilution is X, it will, if there's a down round, for example, it would be a Y. So I would guess that their bet is that as long as they could wait it out through this crypto winter or whatever this is called, that they will be able to issue at an up round later. And then in that case, I think everyone's kind of okay. So I think that's what they're aiming for. As far as the debt, I think that this debt, yeah, I mean, issuing debt for a VC firm could, yeah, it does increase leverage. But I think these things also they may even have an auto conversion type of like mechanism down the line as well. So there's no like say credit event.
Not something you usually see, kind of, I don't think, at least VC firms taking on leverage in that way. But, I guess kudos, and definitely something maybe to keep more of a keen eye on from my side as well.
Well, they have a lot of they have a lot of unlocked sand tokens, so there is a bit of asset backing, right? And a few other things, right? And they really only need a couple things to hit a home run on, and then I think they're kind of good, right? As to whether that happens, I don't know, but I mean, I think it's not the worst thing. I mean, all jokes aside, I've definitely seen worse.
All right. Well, I guess as we're kind of coming up to the end here, there is one last kind of market topic I wanted to cover, which is a bit about the options market. So I don't have a great grasp of the options markets in crypto today, but I'm curious, you guys are a firm that is active there. How do the flows in crypto options market affect the broader spot market? And is the impact there significant compared to, say, what you'd see in traditional finance? The impact the options markets can have.
I mean, for most of 2023, right, when you look at Ethereum prices, and this is because after this bear kind of what's happened in the bear market, you could say starting in 2021, everything really getting crushed right in 2022, like left and right for various reasons. Like the interest in crypto has come down a lot, right? And so like you could say your natural volume has also come down a lot, right? And the amount of volume needed to both move the price of everything is a lot less, and at the same time, any kind of stacking of bids and offers can suppress the price a lot easier, especially until this whole ETF news really started taking off, say like a couple months ago, right? So what's actually happened is that there has been a large option sellers in Ethereum, which started very early this year, and it really, I mean, it's still continuing, but it had a major effect on dampening the movement of Ethereum for months on end, and it still does, and it still does have like a net effect even today, I think. The reason is that when you start looking at the beginning of the year, right, and I'll use volatility numbers as simply as a kind of a gauge. You just look at it as a number for now, but let's say Ethereum volatility, right, or the expected movement was, I'll give you a number, like let's call it like around 75, right? And Bitcoin was 60, right? And Ethereum is kind of the secondary asset to Bitcoin, right? So Bitcoin is like you always consider that like digital gold and or what is it, like the equivalent of the gold of crypto, and then Ethereum is the silver, right? And you expect more movement, more volatility in Ethereum or in silver, right? So hence the implied volatility was about 15 vol points higher for Ethereum. That makes a lot of sense, right? fast forward to today, about, let's call it, 11 months later or something, you're actually finding Ethereum implied volatility, which is basically the pricing of Ethereum options, at a lower volatility than Bitcoin, and that has been effect. I think that, and you could tell also with the realized movements of both Ethereum and Bitcoin, right? Like even this month, if you look at the rally in Bitcoin, it's like, I don't know, like 13%. Ethereum's like 6, right? So you could tell like the movements are actually suppressed by this supply. At least this year, it's I think it's somewhat unprecedented, but a huge effect. Quite interesting, actually.
Well, I don't want to get too far into the territory of speculation here, but the seller here, is this a desk that's just executing this across multiple counterparties? Do you speculate this is maybe a Ethereum whale, perhaps from like ICO period that's this dampening effect on volatility, or where is that coming from?
Oh, I've heard a lot of different guesses as to where this is
Yeah.
from. Generally, the general accepted story here, again, I can't really verify it. Someone out there may be able to, but is that once Ethereum went to this proof of stake, right? Like, if you put it in Lido, you make, I don't know, like 4-5%, something like that, right? For staking it, right? So if you go buy Ethereum, especially if you think it's cheap, right? You basically get 4% for the staking, right? Selling these options probably annualized, you get another 10% or something like that, maybe even more, right? All of a sudden you're looking at 4% staking yield plus another like 10-12% on just what do you call it, like selling options, right? You end up having really like a 16% head start to like buy this stuff, which, if you're buying Ethereum in the mid thousands, like 1500, 1600, 1700, you have quite a bit of buffer, right? I mean, on the downside, and on the upside, yeah, you're selling things, and on the upside, you're going to make the 4%. Plus, if your calls, in theory, do get exercised, even though, like, say, derivate options are cash settled, but let's say that you unwind a position because your options went in the money effectively. Yeah, like you could end up making like 25, 26, 30%, right? If things just kind of, if Ethereum just prices just flatline, you make like 15, 16%. And, in the worst case, the stuff has to drop like 16% from, say, like a mid, like, 16, 1700 price level to start losing money, right? So I think that's kind of been the thinking or mindset of whoever's been doing it.
I guess maybe to the extent that this is public-ish knowledge that you can just see from different flows, if this person has been selling options throughout 2023, given the recent price movements, are they in a more unprofitable like slash bad position there, and is there any sort of risk associated with that in the broader market, or I've kind of seen some hand wringing about that as well, and unclear what to think.
So if it's like, again, if the general accepted notion that it's kind of like, this kind of guy's buying it, staking it, and then selling some options against it, because it's covered, in theory, it should be okay, right? Because it's almost like you buy it, set a limit price higher, which is through your options. And if it gets above there, right, you're making a lot of money. Like, don't get me wrong. If you're up 30% for the year on Ethereum, right, it's a damn good year, right? Like, it's not a bad year at all, right? I mean, you beat every other fund, hedge fund, God knows what, right? Like, you could have only done better buying Nvidia or something. So, like, yeah, that's, or I guess Bitcoin, right? Like, it's not a bad year, right? The only thing is whether they have the time to meet the margin calls at the exchanges, right? If not, then they could get margin called, and then they would end up just kind of being forced out of the options, and then having to deal with their Ethereum. But again, it creates a temporary problem. But again, for these guys selling it, not particularly an issue, right? Because it's just a short squeeze. There's limited recourse to these options, so they get unwound, and then they're still left with Ethereum that they may be staking still. Ethereum as a price probably goes up, at least temporary from that. If they're even late, they can sell the Ethereum. So is it ideal? No. Is there a mismatch to what they've done? Yeah, but is it the end of the world for them? Probably not, right? the danger is if they're actually trading firms that have a significant naked short position. If that was the case, yeah, then it'll be trouble.
And when you say trouble, that is trouble for the venue they're trading on, like a deribit, or
So
sorry
it
for
will
the
be.
kind of amateur questions. I'm trying to walk through this whole flow
Oh
of
no, that's fine. So
how this
I mean,
cascades.
hey, I mean, the core of the trouble is obviously this trading firm because they're going to be blowing up, right? At least in this position, right? They're
I'm
going to be
on
losing.
table stakes
They're
that
going to be
they're in trouble. Yes.
they're going to be dropping a lot of money, right? So,
Yeah.
yeah, that's the one, right? The other one is whether the exchange can handle like the kind of the gap risk because you could have a lot of options trying to be unwound at the same time. So the whether the insurance fund has to be big enough to be able to handle that, or else you may find also for the other counterparties, they may have to end up socializing some of the losses. So there could be a little bit of those issues, but again, due to that, like we've seen exchanges like Deribit, like particularly for these large sizes, significantly require more and more margin for these particular players. So they're taking the prudent risks, right? So it gives the exchange a lot more buffer. It's also potentially trouble for those who've positioned the same way, just because the mark to market as these things are being forced unwound could be quite harsh, right? Those are, I mean, those are the sectors who are going to be in trouble. So a number of players, but possibly like for the exchange, I think it's rather mitigated at this point. Other players, if they have smaller positions, yeah, it's going to hurt, not too bad. If it's an overwriter, it won't be too bad. If it is some trading house that's trying to, like, I don't know, sell it, yeah, it could be quite problematic for them because they're going to lose a lot of money.
Yeah. Yeah. Uh, good to know. Okay. All right. Well, thank you for that explanation. Well, maybe just as we're kind of coming up on time, I'd love to wrap up just kind of getting your predictions or insights for the future. So, two questions. One, maybe today, what's most piquing your interest within the crypto markets, whether it's something obscure in derivatives or something in DeFi? And then also, what are some predictions for the next 3 to 5 years, just in terms of interesting segments and sectors? I asked them together because maybe the two questions could be related.
So currently, I guess what we're watching the most is the ETF approval. So some of the interesting trades is probably ramping up some trading in the GBTC. Previously I think I've been a quite bear of the spread, but this time I'm quite bullish because things change, right? So ETF approval, and it looks like there's a true bona fide interest of Grayscale turning it into ETF. So I think from there, those that looks very interesting. U.S. ETFs can, I think, really in reality in day one, it's not like anything to move the needle, but the fact that you have opening up for what you call U.S. retail, especially for like our IRAs, being able to easily potentially go into Bitcoin, Ethereum, and possibly other crypto that's been turned into an ETF. That can be potentially a huge, because that is kind of a tax. I mean, it becomes finally available as a easy tax deferred trading or holding strategy, right? So it's quite interesting there. Um, you know, Binance settling their legal issues, huge for the market. I think that's been a huge cloud over how the what kind of form they would be chased, and how on like downstream how that will look like. So again, that's huge for crypto in general. Um, so yeah, those are the kind of things overall we're looking at in terms of trading. I think options can continue to look very, very interesting, and areas that Bastion is increasingly putting some resources into. I also think, like, specific to say like a TrueFi that we're both so intimately working with, uh, either this kind of tokenization of RWA on one side. It's interesting that because of the high interest rates, there's a lot of like T-bills being done not only on TrueFi but in other protocols as well. That looks potentially interesting for the future. And also, I think with some of these market opportunities, I think the lending and borrowing market is due for a comeback right in the next 24 months. Right, so quite excited about that stuff there. So that's the kind of things that we are generally looking at. 3 to 5 years. I really don't. I don't know what's going to be. I don't know what's exactly going to be out there, right? Like, five. If you asked me like 5 years ago that like DeFi, like there would have been this much volume on the DEX, I would have like laughed my ass off, or that. Or 5 years ago, we looked at RWA stuff like tokenization. I was like, yeah, this shit's like 10 years away, right? But here we are 5 years later, making some decent like progress. So yeah, I have no idea what's going to be around in 5 years.
Totally fair. Well, thank you so much for taking the time and speaking with me today. Hopefully everyone that listens will gain some insight into everything from building a trading firm to what the market looks like today. For anyone who enjoyed this, definitely feel free to follow Masa on Twitter. His handle is the Sky Hopper, Hopper. Actually, what's the origin of that name, the Sky Hopper?
I don't really know. Like, I mean, names are really tough, right? And we must have used some kind of name generator.
Really?
I think that's what it was. Yeah, it must have been some odd name generator, and then we were picking between, and then I guess it created a bunch of these potential names, and then and then we put it up for a vote, and it came to that one for some reason. I have no idea what it was. Right? I think it actually is originally, I think there was a very like obscure like Star Wars like the Resistance has some kind of, I don't know, buggy or plane or something of that name, but I don't even know, right? So that's how it came up. So very last minute like thing, right? Like we really had no idea. Like oh, it's like we should start a Twitter account. And we're like, what should the name be? And then we're like, I don't know, right? And then having a name, right? Like
yeah.
Like just having your own name is kind of, I don't know, like kind of not cool. So we want to have it like anonymous or what is it, a pseudonym, right? And then you're like, well,
pseudonymous,
yeah. So
yeah, I definitely regret using my real name on my Twitter, but
you could change it. You can change it.
Yeah, I've thought about at the very least changing my picture so it's not my face, right? I feel like there's so much association even with your face, even more. So take one step first there.
Just buy some NFT and just shove it on there.
Yeah, of course.
You don't have to buy an ape, you could just buy like, I don't know, something else.
Yeah. And also I just checked. Yes, it is a Star Wars reference as well. But for anyone who enjoyed this, definitely follow the Sky Hopper on Twitter. Make sure to subscribe to the podcast and definitely please give us a share. And Masa, once again, thank you.
Oh, thank you.